NBA.com. This is John's reports for the 17th, and well, as expected, this was the S&P starting to fade a little bit. The Nasdaq had rolled over quite a bit, so it was only the S&P holding things up, and it started to fade off pretty quickly there. And you know what that meant for NQ. And the problem was this, where we were talking about the shakeout. Um, Once you get to positive range on it, the minute you dip below, and actually I have to increase it here so you can see it on the screen. Um, we moved just under, and then it just rolled over. And the closest we got was right there at a perfect zero reading on it, and the rest of them fading horribly below. And you can sustain it for a little bit, but then it collects and boom, and then you're done. From an NQ standpoint, we expected the 50 to fail, and we expected to move with the MBI white towards zero. So go back, check the tape. I mean, this was pretty clear. Uh, no shock. And now, rising zero, so that kind of shortens the path. But we were looking for the positive extremes to fill, and particularly the intraday, we had marked that one pretty clearly. That leaves us, well, you still have a little ways to go to get to this one. That would be another 900 points for the NQ. And what is this furthest one right there? 27. It just depends on if the follow through from the S&P continues. Maybe enough to support it. We'll have to see how it plays in the trigger. And of course, no change from oil because, of course, no change with the Iran conflict. Don't know that the speech from Trump about elections has much to do about anything. Excitement from the euro is going to ebb and flow based on when they announce that they're buying more weaponry as they prepare for their war with Russia. And then gold, zero excitement. And when you get a sell off like that, it's typical that the commodities and that is people have to trade out to cover the position on that. And same with Bitcoin, it was still not significant in any way, shape, or form. What'll be interesting to see is if there's more move into crypto or it goes back into the market on the dip. And if it doesn't come back on the dip, then I would expect the cryptos will recover quicker because that where people will be parking their money as they continue to move out and need a place to put it. Just on the off chance they need to roll back into things. Now, from an ES standpoint, yeah, it was pretty clean. We had the MBI white lead going on early, a little bit of a fight back where the magenta led, but then immediately flipped. And then you started to get the wider spread from the DOC and follow that spread until it gets to the peak and then it starts to get closer, but that wasn't really enough to do much. I mean, literally, you had the orange under for 2 bars. It wasn't even 2 bars, it was 1, 2, and then that was out. So that didn't last long, and then boom, cascading below that. And again, if we shrink this a little bit, we're still not outside the range. We broke those lows just here in the post market, so that's just a little follow through carry on the sweep of stops from the low side range. And that's not surprising. They're just covering that low from the last couple of days. The next significant one would be the lows back over here. Day was that the 30th? No, the 8th. I'm sorry. That was the time. So that gives you an idea, reference wise, where it is. And you can see the selling began near the midnight hour, went into the Asian session, and then European session here late in the European session, starting to recover a bit as we get ready for the U.S. Open. But the intraday action, again, still very clean, excellent ranges. I have no objections both in the long and the downside of this. I think that's super clean. So who can argue with it? Every little peak that just gets above the 23 and you end up with your new MBI weight, it's a return back to the zero. Just following that cascade. So just a rinse and repeat kind of situation. It's all looking good. Anyway, anything relevant, I will certainly put on the team chats and also give you update on the new program adjustment. Maybe we'll even put it up for Monday next week's video so that you can see what the adjustments. Minor stuff, but I mean, what it does is it just changes the ratio of where the turnaround flip is, because there's always this consideration of, you literally could just stay all red all the time underneath 23% and force every cover point above 23% and then new longs. I prefer taking that range of the 23% because, as you can see, it varies. You get the tight range here, then a more expanded range. So is it worth giving up the extra? These get into probability games. The gap here in range from the low all the way up, in this case, 20 some points. Well, the same 20 points would take you up into the 38%. So it just depends on the compression of the Fibonacci or Morganacci lines, whatever you want to call them. I use the Morganacci because of the traditional Fibonacci. They would just take the longest high and then the broadest low for the calculations, and that's not what this does. Anyway, have a good one. Trade well. Talk to you later.